All right, so some of you have been in these sessions before, so you'll probably understand what we do, what's going on here. For those that haven't, for years we use one strategy where we quantify supply and demand in all the major markets for day trading, swing trading, longer term position trading and investing, and of course, any and all markets, stocks, futures, forex, options, bonds, real estate, cryptocurrency, doesn't matter. It's all about supply and demand. This is a strategy I developed many years ago on the trading floor of the Chicago Mercantile Exchange, and based off focusing on where banks and financial institutions are buying and selling, so that we can start to understand what those footprints look like on a price chart. And the more that you can understand how a bank or financial institution, where they buy and sell versus where the novice trader and investor buys and sells, that's the goal, right? Anybody brand new to these sessions and maybe a first time in these sessions? FX Street's been around for a long time, many years. I've been doing events at FX Street since way back, many years. Okay. Let me just share too, I have a new email address, so I'll share this with you now and I'll share this with you at the end. And here it is. So this is a new venture this is where I deliver all of my stuff now, SeidenStrategies.com. But most importantly, here's my email address here, sseiden@SeidenStrategies.com. So if you have any questions about what we're going to cover today, maybe you sent an email to a different email address that I don't even have access to anymore, what have you. But there's the email address, sseiden@SeidenStrategies.com. Make sense? There it is. All right. So earlier today, delivered a session. I want to share some of that information with you. I know it looks like if you look at the S&P chart over on the right, on the left, coming into one of our supply zones that we've been over here for a while. Okay. Notice these supply zones, structure-wise, they look great, right? This is all about structure and location. And we would expect prices to fall from this area. But when we take a deeper dive into not just the equity index markets around the world, but the inverse markets related to them, we see that prices, it's not a surprise that prices went a little bit higher, before falling. And is this the top for a long time, right? The charts are not suggesting that. And certainly suggesting that we should fall from this area, but we want to be able to quantify risk, right, reward, and probability as objectively as possible. So when we take a look at these two supply zones here, see that? We see that they are inside of all of this trading activity here, which suggests that there may not be that this is not an area where there's a huge supply-demand imbalance. Right? We hit a level in the NASDAQ too. And at the same time, all of this are just pullbacks to our fresh supply up here. Okay. Or what was our fresh supply up here. The actual fresh supply zone is significantly higher. We're not going to worry about that now because there's little chance that price is going to get there, today or in the short term. But anyway, I just want to point out that while structure-wise these levels look great, and we would expect prices to fall from here, typically these levels are not going to be anywhere near as high probability as this level up here. Okay, all of this is inside that. All of that is a pullback to that. We want to keep it fresh. It's all about the imbalance. Okay, all about the imbalance. Okay, when we look at some inverse markets to help, guide our thoughts, guide our decision-making process, we look over on the right. The U.S. dollar is one of them. Now I know the dollar's moved. I took this picture a couple hours ago. But nevertheless, it's still generally, yes, is it near areas where prices moved higher from? Yes. Would we call this even remotely, would we call this demand or fresh demand? Probably not, right? The fresh quality demand zones are lower. So for example, a higher probability opportunity than today would be the S&P up into this area again, or this fresh level up here, and the dollar being down into fresh quality demand. Does that make sense? Makes sense? So we have, right, we want to look at it's not just here's what supply looks like, here's what demand looks like, and let's figure out our risk and reward and probability from that. It's all about structure and location. Having said that, let's dive into the live markets here. And here we go. Okay. And for these sessions, we can look at any markets. So if you have a special market you want to look at, anything in the Forex, right? Forex futures, spot Forex, equity index, commodities, futures, you name it, any of those. Let's start up here with the NASDAQ, which hit our level up here this morning, our area of supply. Let's take a look at that. There we go. So again, an overnight supply zone. We're falling from it as expected. Let's look at the S&P also, and then we'll come back to these. So the S&P touched our 30-15 supply zone, and we're falling from that, again, as expected. But we'll go down to the smaller time frames in a moment and see where our opposing demand zones are and everything like that. Is anybody short the equity index markets from these levels? If not, we can just move on. If you are, and yeah, so some of the bigger equity index markets, for example, the Nikkei, I'll show you some of these. They have significant supply zones above current price, right? So for example, the Nikkei is, it's slowly going through this area here, but don't forget, this area has been touched and tested a couple times, right? And then we have our higher zone up at 22, just above 22,000. So that's a fresh level. The chart is suggesting there's a significant supply-demand imbalance up there. And let's go to, I want to show you the DAX. And I'm showing you some of this stuff too because we're not together every day, right? We're only together once or twice a month. So in the DAX, we're looking at 11,730. So it's a big daily zone up there. The meat of that really starts higher from the origin of the drop, which is really around 11,950. Okay. And then, when we look at markets like, for example, I don't know if it's the Dow or the Russell. Yeah, we go to the 4-hour here. Okay, we see we have some supply in the area, but significant supply is higher. Does that make sense? Okay. All right, so that's kind of that's what we have in the equity index markets. As far as demand goes, there's an overnight demand zone if you're short equity index markets and wondering where the next opposing demand zone, might be, right? You may want to look down around 29.95, which is about 10 points lower than where we're at right now. But again, it's an overnight demand zone, so likely to get a bounce from there. But we'll see once price gets there. The much higher probability demand zone is our gap demand zone below 29.47. Okay. All right, let's keep moving. Yes, we can go over to Bukhari. Yeah, that's a pretty big question. So there's a whole lesson on that. But we can, you'll pick up, I think, on some of this as we go along here. All right, let's take a look at the Aussie CAD. All right, here we go. So someone was looking at this market. The first thing we do is start with the larger time frames. So I'll always just quickly go to the daily, weekly chart, just see where we're at here. So we see prices up at an area that it's been to before, and it's fallen from. But because we've been here a number of times, it suggests that there's not as much supply now as there was before. We do have some fresh demand not too far below, so that kind of gives us a general idea of what we want to be, what we'll look for and take as we go down to smaller time frames. Okay, so given that prices come up so much, it's in an area where we've turned lower from before. We probably want to look for demand zones that are lower than current price. In other words, not close to current price, but kind of quite a bit lower. And that will come in right here, 87.44. Okay. There's three reasons why this is likely to be a decent level. And of course, it's below all of this trading activity, which is ideal. Okay, so you might want to pay attention to this one. And then on the upside, so again, let's go here. So none of this is fresh supply. So we would not take that as supply. Remember, pivot highs and pivot lows are not supply zones. Okay. So let me scroll back for you here. And I've got to hang on a second. For some reason my taskbar is still up, so it's not letting me see not letting me scroll on the bottom of the chart. Hang on one second here. Okay, now let's try this again. There we go. Now I can get the... Okay, so we want to focus above all this, and we're going to look in here. Okay, so I'm going to go back to about June 18. There we go. Okay, when we do, so again, we want to get above all of this stuff. If you want to keep it fresh, you want to keep it high probability, you want to get above all this, and that would bring us right up to here. Remember, this is all about structure and location. Where are banks buying? Where are they selling? And what do those footprints look like? Now, neither of these are going to be considered quality zones that would score out high. But remember, there was buying and selling going on here, right? And this is more for newer people. Buying and selling going on here. Supply and demand appears to be in balance. All of a sudden, there's a strong drop from this level. That can only happen because supply exceeds demand at this price point, right? If that statement was not correct and supply and demand were in relative balance here, wouldn't price keep trading sideways? It would, but it couldn't. Why? Supply and demand are out of balance on the supply side. The fact that price fell from this level in strong fashion and that there was kind of not much trading activity in this area, both of those things suggest that there's a big supply-demand imbalance in that area, okay? And the fact that we had some demand and supply over here to the left, those also help us determine that. The fact that price has not been back to this level since price fell from it, that's where that term fresh comes in. Does that make sense? The amount of supply at that level right now is as high as it's likely ever going to be. Okay. Nice profit zone between the two, but you also just got a mini lesson, I guess, into finding those levels. It is, Maurice, but remember, as long as there's that opposing level over there, that gives us some secondary evidence. All right. What other markets? Otherwise, I can certainly keep going through my list. Showed you the dollar already. If you don't have any more markets, why don't we take a look at bonds? Bonds are a very big deal when it comes to where our big FX markets going, right? Where are big currency markets going around the world, equities, all that. With any hint of higher interest rates anywhere, money would likely flood into that market to buy up those higher interest rates. Money is always looking for a good home. And yeah, we'll go to EC in just a minute. So take a look at the 10-year. We're looking at a 4-hour chart, which is somewhat of a larger time frame. Okay. Price sitting right in the middle, 138.28 and a half. The level above at 139.09, we've been there before. Same thing at 138.11. So neither level is fresh, but the fact that bonds are just sitting right in the middle means there's not much opportunity here, and bonds aren't helping us with direction in any other market, other than telling us, you know, there's relative balance right now. Now it's not. I mean, it's always an unbalanced equation that takes a certain period of time to play out. But nevertheless, we wouldn't go to the bonds for any information yet. If the bonds were down into this demand zone down here for the first time, okay, then and the equity index markets were in supply, that'd be a very high probability of that. You don't need any of these inverse markets to help you out, but when they do, it becomes a pretty big deal. So we looked at the dollar earlier. We looked at a larger time frame chart of the dollar. Again, same thing. The dollar's just sitting down in this, the bottom part of this range where we have all these pivot lows. Remember, pivot lows are not demand. Okay. But the fresher zones are lower. So having said that, the dollar does have, again, you're into this, again, it's nothing great, right? You're into this demand zone again. I think we've gone over this here earlier in the month. We're in here now for the third time. So I want to show you that before we go to the euro, because when we go to the euro, you're going to see the euro has some supply above, and I believe it's sitting right here. Right? So if the dollar has some demand, euro likely has supply. There it is. Okay. So we came up there a few hours ago. Now we're back up here. Again, because that dollar level is not high probability, if you took a trade like this in a short euro type position, you may want to consider reducing your risk, as the odds are lower than this being, than if this were a fresh quality zone. Does that make sense? It's because of that dollar. All right. What other markets do you want to take a look at? Again, the strategy we utilize here, it's been the same strategy for many, many, many years. Any market, any time frame. Yeah, let's take a look at oil. No problem. We were going over oil this morning. There's two charts that we need to look at. Here's the 4-hour chart, just to give you some context as to where we're at. You see demand is quite a bit lower, supply quite a bit higher. There are some smaller time frame levels to take a look at, and for that, I want to go to the smaller time frames up here. It's like a 30-minute chart. This is the level we went over earlier this morning in. I do a live morning session every day. In fact, there's some FX Street members I noticed this morning that are in there also. This level starts right here at 34.75. That's 34.75. Now, we can see price touched that level this morning and started to fall. So now we have some secondary evidence that supply exceeds demand up there, right? Big institutions are big sellers of oil, up there and above, right? That's what the chart is suggesting. So because price just touched this level and fell, that suggests that another turn at that level, if price goes deeper into the supply zone, then another turn lower is likely from that area. Okay. All right. The only downside is this. The yellow circle around these areas means that these levels are not, those levels were created in not ideal hours. So maybe it was kind of after hours, overnight, or maybe at, well after the trading session, but they're not at peak session times is the point there. Okay. On the demand side for oil, I think we can stay on this 30-minute chart. Let me just scrunch up a little bit. There you go. So you can see the quality fresh demand zones, which are represented by the yellow box, are down around 29.40, 29.40, 29.50. All right. Again, the picture or pattern that we need is here. That represents quality demand. Okay. Some other evidence we can look at. How much time did price spend at the level? How quickly did price move out at the level? Almost more importantly, how far did price move away from the level before returning to it? And it hasn't come back to it yet. Okay. All these things are help us understand the supply and demand equation here. Is there a small imbalance, meaning it's not a big deal or not an area of demand we'd want to focus on, or is there a big imbalance, meaning big financial institutions are buyers down there, and yes, that's an area we'd want to focus on. That's what all these other little things help us understand. Okay, but oil did hit our supply zone up here and is falling a little bit. Another move into that area, you'd likely to see another drop. Okay. Let's keep going. I know the NASDAQ has room. Okay. But you can see it went, it popped up earlier, it comes down, then it pops up. It's just, there's a, okay. Yeah. So that was the whole point of what we went over with, what we went over here with this, right? In our kind of pre-session prep. All right, let's keep going. Yeah, inverse markets are not giving us much today, and that's okay. Okay, most of them are sitting right in the middle. Some are sitting at demand zones, but they're not tested demand zones. They're not fresh demand zones. So that helps us understand the quality of those supply zones in equities. Again, likely to fall, like we said earlier this morning. They are falling, but the likelihood of a dramatic drop from these levels in the near term, and just the odds are lower because of that. No worries. All right, I think someone else wanted another FX market up there. Let's see, Euro, New Zealand. Euro, Aussie. We can look at both of those. All right, I have not looked at the Euro against the Aussie in, I don't remember the last time I looked at it. It must have been probably a couple weeks or so. We can certainly look at it. Again, we start with the larger time frame real quick, just to see where we're at, bigger picture context. This helps me understand what to focus on, the supply side or the demand side. So obviously this market's fallen quite a bit and is coming into what appears to be maybe a little demand down here, and maybe that's why you're asking. Let's blow this chart up. Okay. So price is just now entering all this stuff again. Again, larger time frame. So all right, let's blow this up and let's take a look back here. Yeah, we can take a look at gold. Gold is not into a great area at the moment. Actually, but I haven't looked at gold in about 90 minutes, so that may have changed. I'm just going to use this horizontal line, not because here's demand there. I just want to scroll back, and once this is a quick way to do it. So now I know where to look. Now to look for demand, I want to look below the black line, right? There's nothing above the black line that's going to be fresh. So that black line is only put in here to help me with the analysis to speed everything up. When I do, we see, none of this represents quality significant demand, but this does, right? And the presence of that horizontal line help me help me figure out where to look. Okay. So now we can scrunch this up. You can see though, even though this market's down, there may be more room for this thing to fall. Okay. At least that's what the chart is suggesting. And maybe it does bounce. I'm sure there'll be little bounces. I mean, markets don't just move in a straight direction forever, right? But are those bounces that we'd want to be a part of? Or do you want to wait for something higher probability and higher reward? Two demand zones there. Let's see. Let me blow that up. I may have missed something, but let's look. So you're saying, are there two demand zones in here? So I think you're hinting at the lower one, right? This thing just below? Yeah. If we went down to a smaller time frame, you'd probably find a nice little demand zone in there. Sure. So, but you're going to hit this one first. Okay. We're on the same page. All right, let's move on to gold. Let's see here. So gold, we're going to look at two time frames, really, 4-hour and 60-minute. Actually, I guess before we do that, just want to give everybody context. This is where gold is at right now. This is the weekly time frame. Okay, so when price, if you've been in sessions with me over the last month, when price gets close to that, or last few months, I mean, when price gets close to that supply zone or is at that supply zone, yeah, we're very interested in that. But as it moves away, like it did now, back down to 17.12 at the moment, we just need to know where that is above and what's below. Having said all that, and now you have that kind of big picture context of location set, let's look at the 4-hour. And there's some demand. Now the 1647 to 1635, there is another level sitting just below it. So this is really part of this. If you wanted to keep it a little higher probability, but you're going to increase your risk too, you'd go down to 1623. That's the bottom of this thing right here. Okay. You're likely to increase your probability if you combine both those areas, but you're also going to increase your risk. So you may want to reduce your position size to keep that risk in line, make sure you're comfortable with the risk. Okay, let's keep going. So we looked at the weekly, we looked at the 4-hour. Let's now go down and look at the 60-minute chart. So on the supply side, nothing exciting, but up around 1731. We might have a little supply up there. But there's nothing fresh that's close. I mean, the other thing with these two zones, even though this one worked fine, it's in the middle of all this. We can do better. We can do much better. Let's see what these are. These are 15. Oh, these are little 15-minute levels. Yeah, there's a decent little level sitting below, right around 1700. But again, just so you're aware, it was a level developed in kind of during the off hours. So again, lower probability. Okay. Good question there, Pete. Is the width of the level significant in itself aside from comparing to the profit margin? Yeah, the profit zone. Yeah, so the width of your level from top to bottom, I think, is what you're asking. That's your entry point to your protective stop order for managing the risk. So that's what you're asking there. So whatever that is, you have to pick a number, right? If you're, what's acceptable to you, for example? Are you only looking for opportunities that offer profit potential, risk reward potential of 3-to-1 or greater? If you're looking for, if that's your minimum, then you probably want to look at, when you look at your charts and your markets, you want to look for opportunities that are offering you more than that. So if 3-to-1 is your kind of bottom line, then you probably want to look on the chart for opportunities that offer you, say, 5-to-1. And then you can still, if you want to keep it higher probability, look for opportunities that offer you 5-to-1 and take your profit at 3-to-1. Make sense? Again, it's all what the chart is, what the chart, the supply demand scenario is on the chart that's offering you that opportunity. Okay. And again, see how the equity index markets are kind of bouncing up here? You know, they're maybe halfway back from this morning's rally. Not a big deal, and they can certainly end up much lower today. But the reason why we're just not falling from this area, one of the big reasons comes back to our this, right? It's just taking one little step deeper into our supply and demand analysis. One little step deeper into what's real and a big step away from what we feel. Okay? All right. Let's keep going. Is there another market you want to take a look at? If not, I can, again, continue to go through my list. We looked at equities. We looked at bonds. We looked at some FX markets. We looked at oil. I think we looked at gold. Did look at gold. We can go back to the FX markets for a little bit. And why don't we go to, I don't think we looked at the Canadian dollar yet. And we can look at the VIX too. Actually, let's do that. That's not VIX. Let's go to VXX here. Bob, the VIX is a key market, but key chart to look at. But remember, the VIX measures. I mean, in simple terms, it's how many people are how many puts are being bought on the stock market is basically, right. To keep it really simple, how much insurance to the downside, how much portfolio insurance is being bought in the stock market? All right. Typically, when that number gets high, price is moving down and closer to demand. A high VIX and a VIX into supply and a stock market or equity index market who's into demand, that's a pretty high probability buying event. But when we chart VXX with the market open, I'm sorry, no, it's open. With it up today, it did gap down into so this is a level that we gave to our members. Here's VXX is just gapped down into one of our levels I see here, 3240 up to 3285. And then the supply side is going to be up here closer to 38, just before 38. Does that make sense? All right. Okay, and again, you're seeing this gap down here because the stock markets are up, right? Not a lot of people are thinking their car's about to crash into a tree. Everybody's thinking everything's great, right? Smooth sailing. We can put it in autopilot on right now. That's what's happening here. All right, let's move on to the pound. Okay. So I thought we looked at the pound earlier, but I guess we didn't. I really thought we did though. Big picture, I wanted you to see where the pound is. Again, it's up into an area that was, decent supply, not great. So nothing high probability there. We go down to the 15-minute chart. So here you can see we're hitting this lower level for the second time. No surprise we went through it, right? And we barely touched the upper level for the first time. In fact, I don't even think we touched it. Well, barely. Depends where you had exactly where you had your distal line of supply for that one. But there they are. So that's this zone up here, supply zone with a yellow box. It means our criteria. And let's get rid of this lower one because that doesn't matter to us anymore. So we barely came up here. If we do trade up to and maybe into the 2360 area a little bit, that's okay. Or we already have a little bit of secondary evidence that there's some supply up there. We got close to it and price peeled off. So watch for that again. Again, you're looking at a market here that's against the dollar. So ideally the dollar is down and into some sort of demand. I know we looked at it already, so we kind of know that it's It's not into a great area though, right? Not into a great area. It's into this. Now, if the dollar does, rally again from this level, then, you'll see the euro push lower. You'll see the pound push lower. Equity index will likely push lower, and so on. Good question there, Navjot. So that zone is inside of a pivot. It's not the pivot itself. No, I would say no pivots are supplier demand levels. Some pivots contain really quality supplier demand zones. That's really the best way that I can answer it, and the most accurate answer I can give you. All right, so that's the pound for you. And let's keep going. All right, so we're back at the equity index markets. If you have any other FX markets, again, we can go over spot FX too, not an issue. I'm trying to think. We didn't really look at the yen. Maybe we should spend a little bit of time on the yen. Let's do that. The yen really, there's not much to talk about in the yen. The reason why the yen wasn't even on my list is take a look at where it's at and look at the daily chart of the yen. Remember, our whole concept of supply, demand, and relative balance, just take a look at this. Where is price? Supply, demand, or relative balance? If it's anywhere near relative balance, we have no interest in it as far as an opportunity. Okay? And this one's sitting right in the middle. Yeah, Sam, if you want to, I'm answering the question in the chat. If you want to wait for high probability levels, you need to get out of the middle and out to these supply and demand extremes. We've gone through lessons on that before and how to do that with our little stick figures and all that. But that's exactly what we're talking about here. And this is why the yen wasn't even on my list today. Why waste time on a market that's at equilibrium? Or not equilibrium, but relative balance, right? The yen is. Great. Let's move on. There's other markets. Okay. Yeah, the dollar needs to get out of this area right here. So there's those levels. Obviously down around 98, there's an interesting little area down there. Price did try to get back there back in March, couldn't, and took off. So there's some secondary evidence that demand exceeds supply down here. The better levels are much lower. So we'll leave that alone at the moment. All right. So I want to make sure that I'm crystal clear with everyone here. Whoops. What happened there? But so for those that are around or show up, come to the sessions, wanted to make sure you have my correct email address. This is where I deliver everything now. I also have the automated tool, supply and demand tool in there. But we can go over that another time. But sseiden@theseidenstrategies.com. So there's the email address if you have any questions. I know we're out of time here. Good question there from Razib. Can you use it more than once? Sure. You can use a supplier demand zone many times. The number of times price hits that supply demand zone is not what matters most. It's how deep price goes into that supplier demand zone. Okay. If the first pullback into a zone, price goes fairly deep into that zone, we wouldn't use it again. Right? Does that make sense? All right. Because you may be able to take a level multiple times. Maybe we can buy at a demand zone 3-4 times. If price just keeps touching the level, that just tells us demand greatly exceeds supply there. Okay, great. Have a great day, everyone, and we'll see you next time.